Oh, getting quite comfortable, aren't we?
Ring ring ring, hero simps and virgins, also peasant and incels.
Can you please be respectful?
Welcome. I am. Welcome back to Krown's magical. Also, no laughs allowed. Okay. Goodbye, Bella.
Welcome back to the Air Krown Crypto channel. It is finished Independence Day, and we are independent from... I don't even know. I don't even know what's there. They don't own Finland anymore. Anyways, with that said, I would like to wish you a happy and healthy start to the site's Tuesday morning over here. A lot of things to be discussing on this particular video. One, a continuation of the lower term time frame analysis. Obviously, the higher term time frame analysis not really changed here, obviously, but the HPDR indicator, the historical price delta range indicator, is now officially live on the store. By the way, if you did or if you do have access to the Caretakers STC indicator, please email support@krowntrading.net with your receipt, and they will actually give you the HPDR, the new indicator, for free. Anyways, other than that, yeah, I think it's a good time to just jump right on into this analysis. So I wanted to start off things a little bit different here. I wanted to start off things with an analysis of the dollar index, Dixie, as there's a couple things of great interest here, actually. First and foremost, on the short term, is this one getting ready for a bit of a bounce after a pretty hefty downside move? Yes, I do think so. The reason why I think so is because one, daily RSI is starting to show multiple drives of bullish divergence come off the lows, and then obviously the daily volatility reads over here are starting to go into a contraction mode. So I'm looking for a bounce, but very likely just a bounce, and the volatility indicator tells us that it's probably going to be a corrective move. So bounce into continuation, essentially. Anyways, as we go through it, though, I do want to maintain that on the higher term timeframes, I'm still looking further south. One, because the monthly is going into a contraction phase, and then more important, or just as important, I'd say, is the monthly RSI showing bearish divergence coming in from the highs of 2015 to the highs that we're seeing right now in late 2022. So long term, still looking for this one to come further south, somewhere between about 101 to 102 for the next major bounce attempt. Short term, probably going to try to bounce here, and then we'll come back to it maybe later this week, maybe early next week, and see where we're at from there. Anyways, other than that, I want to now jump into the higher term timeframes for Bitcoin, just to remind why my biases are my biases here. And one of the big ones comes in from the weekly accumulation and distribution indicator chart, which we went over in detail on Sunday's video. So if you want the full explanation, check out that video. It's still very much relevant, and nothing's really changed here. The weekly still remains with its upside curvature, and based off of this setup, we have seen on average throughout the full history of Bitcoin here an average gain of about 49%, done over the course of, well, about 2.5 months. A lot of variance right there, by the way. Basically, anywhere between 50 days to 90 days is where we typically do see that take place. And then, of course, we can also see the first standard deviation for that average move as well. So ultimately, coming into like end of this year, January-ish, I'm still looking for Bitcoin to very likely bounce much higher before potentially going lower. Now, in the short term, does that mean that Bitcoin can come back down to its current lows? Sure, yeah. I mean, my main message here is that it's very unlikely, or at least I believe it's very unlikely, that Bitcoin's going to be closing on new lows, and especially like trending towards massively new lows before first playing, a nice, a nice and greater bounce, like a Bitcoin bounce, right? Like a big Bitcoin bounce. To also corroborate this story, we can also look at the 2-day time frame as well. This one's still building its signal, but it's a volatility versus stochastic momentum signature. As usual, I won't go through the full explanation because it's not in there just yet, but the stats here very similar to what we see on the prior chart. So I look at that as great confluence. And once we actually get this one, especially with the volatility indicator starting to expand, that's probably going to be the one that actually times this move within 2 to 3 weeks, basically. So that's kind of what I'm looking for next to really, I guess, look for immediately or more immediately that next major upside move. Until then, sideways and maybe a little bit of downside as we were looking for yesterday is the name of the game. So let's actually get into that right now. Or actually, before we get into that, I should also denote that, hey, whoops, I'm going on the wrong chart. I should denote that on the 3-day time frame for CME, which is closing tonight, it's going to very likely confirm regular bullish divergence, which with any sort of a closure here or higher, that being above 16,950. Again, another reason why I generally have a bullish bias. on the higher term timeframes for a greater bounce, probably above 18. And then once the other charts take over, then that can be propelled significantly into maybe even the shallow 20s. Very possible there. Anyways, as I check my other screen, because it looks like all sorts of interesting things are going on right now, but that's not the focus. Let me get focused once again. Let me get serious on these charts, and let's go over here and follow up on yesterday's short-term time frame analysis. So yesterday's short-term time frame analysis, we were looking for a pullback based off of momentum oscillators. We were looking at bearish divergence. We were looking at stochastic momentum coming down, but likely to play within the range. And my line on the hourly was violated. It was violated. My lights out line. They turn out the fucking lights. It's dark as hell over here. And we came down to the next, to the next color low, as you can see. Sorry, just having a little bit of fun. But you can kind of see on the hourly here how this indicator can play, rather well. I'm not going to say simply, but rather technically, let's say, as we did close below, it's technically just below 17.1 or so. And then, yes, you get your next move down right here, which was, 16,750, which is CME range low there for the hourly. But here's the thing. When we look at the 4 hour, when we look at the daily, while I do think that there are some indications that we might see a greater pullback, definitely possible based off the Dixie chart and based off something else that I'll speak about in a second, if I can stop saying fucking then we can see that the range lows are really more accurately around about 16,700, which were the ones from yesterday as well, just on the 4 hour time frame. So that is to say that I would not be looking for the major move down in this case. And when I say major relative to a medium time frame, I mean coming back down, to low 16s, maybe even mid 15s, until we do get a closure below that specific region again. 16. Let's call it 16.7 or so. It's not gonna be like super exact, but close enough in this case. Actually, a few bucks lower than that. Anyways, as far as that goes, if that were to happen, yes, I'd be looking for next move down somewhere around just below 16, somewhere between 16 and 15.5 or so. By the same token, to the upside, continuation is a lot easier to call here, obviously, anywhere above basically, the current high, and very likely looking at a move towards 18,000, somewhere between 18 to 18.3 or so. Anyways, now that we've gotten through that, okay, we've got that. Yes. All right, let's go check out the daily range on this one. I think that this one still very well accurately represents kind of what we're probably most likely looking at for the next couple weeks here. The overall range in the tight blue area here, relatively tight blue area, would put 18.3 highs, and about, our current lows are the lows, obviously. So again, that's another reason why I do say it's unlikely that we're going to see any major new lows coming in from this exact region right here. I do think it'd be a lot more likely to maybe test somewhere around the current lows and then actually play out a much greater bounce into maybe end of December, probably more like January if I had to guess. Anyways, as far as that goes, I did want to reference this chart over here and talk about the 6 hour time frame, which is actually in the process of potentially putting in hidden bullish divergence, as we do have lower lows on 6 hour RSI right there with potentially higher lows on 6 hour price action. How would you confirm that as higher lows? Need to see a 6 hour closure basically above 17,100 or so. Let's call it 17,150 to be a little more exact. And at that point, probably looking at a move somewhere between the 0.5 and 18.3 there. By the same token, or by the opposite side of the coin, the 12 hour time frame is in the process of confirming hidden bearish divergence on the other side. So which one do you go with? Well, in this case, the 12 hour time frame is a lot more of an easy call for looking for a pretty big move to the downside, or reasonably big move to the downside compared to what we've been looking at for the past month. But that would be with a 12 hour closure anywhere below basically even the 4 hour range lows at 16.7. At that point, very likely looking at a move back down to very low 16s, probably more like upper 15s before the next sort of bounce attempt. If that one's going to play out. So again, that's kind of the tale of two cities right there, still contingent upon validation on both sides, but the 12 hour, being that it is a higher time frame, does hold precedence, to be quite frank. Anyways, going back to the stochastic momentum, We actually have a similar setup to the last few days as well. In this case, the 12-hour stochastic momentum is still pointed to the downside. It will be remaining with downside pressure as long as Bitcoin's below 17,100. This is again on CME, not spot price action, which does have a small discount relative to spot. 6-hour time frame is going to be downside pivoted as long as Bitcoin's below 17,250. 4-hour time frame is going to be downside pivoted as long as Bitcoin's below 17,200, and the hourly is also nope, it's actually up. No, it's actually up as long as Bitcoin's above 16,855. So what does it all mean? What does it all mean? What does it all mean? Same thing as like the last couple of days. I mean, if you've been paying attention to the last, like, I think it's 3 to 4 days now, the analysis has been more or less the same. And even on the short-term time frames, just given us, well, multiple chances for that. It's like, okay, is there going to be another test towards the range lows? Probably yes. Is there going to be a break of the range lows? I would say I'd still probably wait for an actual confirmation of that personally. I wouldn't front run anything right here. Personally speaking, I do think you're going to get a test of the range lows similar to what you had yesterday. And then you're probably going to see another bounce attempt. In real direction will be revealed maybe Wednesday. Ultimately, the focus here is on the higher term time frames because yes, I do think that Bitcoin again is a lot more likely to bounce up to new highs on this current, off of this current low than it is to make massively new lows just yet. Again, I'm not saying that Bitcoin can't make massively new lows from here. Just think it's more likely. Oh, and by the way, I forgot to mention that there is hidden bullish divergence also in progress here as well. Fuck, I wanted to finish that sentence. I forgot where I was. Where was I? Yes. Yes. If Bitcoin is going to come down and make new lows alongside basically all markets, again, it's probably most likely to happen in Q2 of 2023. These sort of segments of the market are, they're fucking difficult, man. They're fucking difficult because, well, it takes a lot of patience. You might be very well right on direction, but the patience aspect of this can be an absolute fucking killer. Anyways, I think that's a good place to leave off on this particular video. I want to once again give a shout out to Bybit, just because they still have their promotion going on. I don't know how they're fucking doing this promotion, by the way, because they're offering 0% on maker orders for both spot and derivatives with my link. Now, well, maybe so many people use market orders that just doesn't fucking matter, but they still have that promotion available for you. Also, they got their Apex exchange, which is in the links there too, which is, well, I figure it's relevant to a lot of people because a lot of people are looking for no KYC. They're also looking for, decentralized exchange where you can essentially hold your coins in your wallet and trade from there. So fair enough. If that's relevant to you, maybe check it out. Other than that, I'll be signing off. Again, if you have the STC, definitely email support@crowntrading.net. They'll hook you up for free. And yeah, that's going to do it for now. Want to wish you the best as always. Take care, much love, and see you hopefully soon.